I'd like to introduce you all to Darren Marble of Crowdfund X. He's the CEO, and he's going to be talking to you about STOs.
Thanks. Well, what's going on, everybody? Jonathan reached out to me, told me he was doing this amazing conference, and I just love this city of Seattle, so this was such an easy sell for me. I'm glad you guys are all here. So I think I've got 15 minutes. I'll try to keep it brief. I'm an entrepreneur. I'm the CEO of Crowdfund X. We're a financial marketing firm based in Los Angeles. We've marketed half of the Regulation A+ or Reg A+ IPOs. We did the first Reg A+ ever. Elio Motors trades on OTCQX. The first Reg A+ IPO to the New York Stock Exchange. The IPO for Fatburger, which raised $24 million. Now we're doing a deal with Drake. He's got a whiskey company called Virginia Black Whiskey. If you haven't heard of it, you'll hear of it in the next 70, 80 days. He's going to raise $30 million from his customers and fans around the world. We also market security token offerings, or STOs. We work with Kodak Coin, T0. T0 just 30 minutes ago announced they closed their security token offering. They raised $134 million plus an additional commitment for another $170 million at a $1.5 billion valuation. Give it up for T0. I also have an entertainment company, Trojan Horse. We're developing a reality series where 10 companies are going to IPO on television, and the crowd can invest. We're very far down this path. And then I'm a co-founder of a conference. So Jonathan and team, I feel your pain. I know how much work you put into this. Crowd Invest Summit, we had our inaugural show 2 years ago, Robert Herjavec. Now we've got Steve Wozniak doing the next one. So I apologize because I am a highly opinionated person, and it's because I'm passionate about what I believe. And so if I offend anybody with my opinions, I'm sorry, but it's also because I'm right, okay? So just telling you. I think ICO is a dirty word. If you go out and tell someone you're launching an ICO, subconsciously what you've told them is that you're launching a scam. And that's because in 2017, out of the $6 billion raised for ICOs globally, at least $1 billion went into a pure fraud. This is a Wall Street Journal published story. So I think that when people say ICO, what the person on the other end hears is scam, fraud, theft, and hacking. So would you hire me if I told you I'm a Ponzi advisor? Okay, this is my opinion. So I think it's a dangerous term. Now, this doesn't mean there's not good teams and good ICOs. Some of those teams that have had success are in this room. But I think it's a dirty word. Security tokens are the future. Okay, this is the next mega trend in crypto. And it's not just an acronym. Security tokens are programmable ownership. They're digital assets that are compliant with federal securities laws run on the blockchain. This is what T0 did. These are some of the benefits to security tokens. And admittedly, some of these are thesis. This hasn't totally been realized yet. So I'm not standing here telling you this is all true today. But tomorrow I believe it will be. The biggest draw to security tokens is the concept of liquidity. The idea that platforms like T0 or Coinbase or Bakkt, the new digital assets trading platform announced by the parent company of the New York Stock Exchange, these are going to be regulated secondary exchanges that will list and trade security tokens. And there may be liquidity. So you can tokenize equity, tokenize debt today. You've got a $200 million company. You can literally tokenize your entire cap table, go out and raise $50 million, and have those tokens trade in the next 12 months. So liquidity is really the big driver around security tokens. The idea that they'll trade 24/7. You can fractionalize large assets. You could buy a piece of a Picasso, a piece of a building, rapid settlement, lower issuance fees. So these are some of the reasons that people are excited about the concept of security tokens. But it's really viewed in the industry amongst advocates like myself as an evolution. This is not a revolution, it's more of an evolution. So digitizing assets. So what is a security token offering? They're regulated offerings. That's what they are. Okay, how do you do it? You use one of these securities exemptions. Reg D. It allows you to raise an unlimited amount of capital, okay? You're limited to verified accredited investors, but it's fast, easy, and efficient. You could use Reg A+, you could use Reg CF, where you can raise up to $1 million, or Reg S for international. The most common exemption today, the deals that our firm is marketing, are all Reg D 506B, which is your traditional private placement, or 506C, where you can market the offer. So when I hear people whine and complain and bitch and moan about regulations, those people don't appreciate the fact that right now, you've got more flexibility to raise money than you've ever had before as an issuer. Because these are all new exemptions, okay? You couldn't market an IPO until June 2015. You couldn't raise capital from non-accrediteds until June 2015. You couldn't market a private placement until a year or so prior to that. You can now market private placements. You can raise from non-accredited investors. These are enhancements to securities laws. Now, they're not perfect, and they'll always be imperfect, but they're better than they've ever been, okay? And my thesis in this whole space is that investors have to win. If investors continue to lose billions and billions of dollars in fraudulent offerings, they will stop investing. That doesn't benefit anybody. So regulations are designed to protect investors. It's a disclosure-based system. It gives the investor an opportunity to learn more about the offer. They may not read the 300-page disclosure, but at least they have an opportunity. So we've been marketing security token offerings for a little bit, since January. Kodak Coin was our first STO client, then T0, then maybe half a dozen others. But these are the observations that I have about this space right now. This is what we're seeing in the space. The first observation is that security token offerings are taking months to fund. These are not ICOs, okay? You're not going to go out and raise $10 million in a day. It might take you 6 months. It took T0 7 or 8. Kodak Coin is still funding. Every STO that's out there is still raising capital. That's a reflection of it being a new, bleeding-edge asset class. There's also confusion about it. Is it an ICO? Is it a security? No, it's a security, but it's a new asset class. So the deals are taking a long time to fund. So be prepared for a grind. Reg D is the most common exemption, limited to verified accredited investors. My personal opinion is that Reg A is a bad choice for your STO. The deals that have raised capital with the Reg A exemption in the last 3 years were primarily consumer products companies, established businesses that have operating history, that have raised millions of dollars in previous rounds, that have a huge audience of paying customers, fan base, affinity groups, email list. So if you are in the audience and you have an attorney that's told you to go down this path, the Reg A path for your STO, your attorney's probably giving you shit advice because they don't know any better. That's my opinion. I think that's bad advice. I think you should go out and do a Reg D. Now, the good news is new STO funds are launching. There's about 220 crypto hedge funds here in the US. Now, some of these only invest in ICOs. Some are beginning to invest in STOs. Some are only mining. Some are quant. But some of them are launching dedicated STO funds. So that's a positive. The deals we're seeing that have the most traction right now are tokenized funds, protocol, or infrastructure plays. There are other types of deals that are funding, but those three, funds, protocol, infrastructure, for a security token world are funding. And then last comment, I think one good strategy is rather than go through your tokenization process now and try to sell tokens, sell preferred equity. Call it preferred equity light, okay? Because that enables you to present a term sheet to an institutional investor or savvy investor that kind of looks familiar to what they're used to, okay? Some protective provisions, some control, maybe a board seat, and then tokenize after the raise. Tell your investors we're selling preferred equity, and then you're going to tokenize. Then you're going to use Polymath or Harbor or Securitize to create and issue security tokens. I think if you've already done that and you try to sell security tokens, you're going to limit your opportunities. So I want to talk about something really important. Malta. Who's been to Malta? Oh, a lot of you guys. Okay. What's the primary language in Malta? Do you know what they speak? English? Okay. Who knows where Malta is? Okay. Who has no clue where Malta is? Who knows where Estonia is? Oh, yeah. All right. Malta. Exciting jurisdiction. I heard it this morning. Estonia, Malta, Singapore. Guess who doesn't give a fuck about Malta? This guy. Why is that? Because Jeff Bezos, the richest man in the world, registered his deal for Amazon to run an S1 IPO here in the United States. He raised $54 million in 1997. Created tens of thousands, hundreds of thousands of jobs. Before that, what did he do? He used the Reg D exemption. He did a private placement, and he raised $1 million from accredited investors. So my question to you is, who are you? Are you an American, or are you an opportunist? Thank you. We got like 2 minutes. Any questions? Yes.
I would like to hear your common retort to an objection that a potential client gives to you when they say, you tell them that a Reg D deal is good, and they go back to you, well, I can't sell it to Joe Blow on the street if I do that.
Joe Blow doesn't want to buy your cryptocurrency deal, okay? Unless you've got an email list of 1 million Joe Blows, there's no audience there. So it's a little bit of a catch-22. Now, you could spend a lot of money trying to go market your deal online and get 1,000 people to put in $1,000. Or you find one guy down the street or in this room, it's one of these tables, they'll put it in right now. So it's a path of least resistance. Now, the exception is if you have a consumer products company, paying customers, an audience, you have a natural group of people, your customers, you can turn into investors, go do a Reg A. But if you don't have that, Reg D is the best bet. Yes?
Thank you very much. I love the Maltas. What do you tell your securities token investors as to when they are likely to have their securities tokens actually tradable on an exchange like TF1?
It's a great question, okay? So you're selling security tokens. When are they going to trade? Because none of the exchanges are live. Nobody's been approved yet by the SEC. So there's a bridge. It's a little bit of a leap of faith. So Fred makes a great point. I'm a big fan of Fred's successful serial entrepreneur in Southern California. But the security token exchanges are coming. This is a fact. The parent company of the New York Stock Exchange, ICE, which owns and operates like 24 exchanges around the world, just the other week announced that they are launching Bakkt, which is a digital assets trading platform. That's maybe the most meaningful news in the entire security token or maybe crypto market that I've seen all year. I don't think there's bigger news than that. And they've obviously been in touch with the SEC and others. So these platforms will be approved. It may not be 3 months or 6 months. T0 today in their press release said September, but they've said May, so it's pushed. But these exchanges are coming. Thank you.